Whenever global conflicts escalate, financial markets react almost instantly. Gold rises, oil surges, and stock markets become extremely volatile. But professional traders don't panic during these moments. They follow something known as the war trade strategy, a structured way of analyzing how geopolitical events affect commodities like gold and oil. In this video, we'll break down a step-by-step trading framework used by traders during geopolitical crises. Part 1. The safe haven trade, gold. The first market traders watch during war is gold. Gold is considered a safe haven asset. When investors become uncertain about the economy or global stability, they often move capital into gold. This increased demand can push prices higher. Traders watch for 3 signals. First, rising geopolitical headlines. Second, increasing market volatility. Third, strong bullish momentum in gold charts. When these factors align, gold often experiences strong upward moves. Part 2. The supply shock trade, oil. The second key market is oil. Oil prices react quickly to supply disruptions, and when conflict happens in the Middle East, traders immediately watch oil supply routes, especially the Strait of Hormuz, one of the most important oil shipping lanes in the world. If traders believe supply could be disrupted, oil prices often spike. This creates powerful momentum trades. Part 3. The volatility trade. War creates uncertainty, and uncertainty creates volatility. Professional traders look for volatility expansion. Instead of predicting the market, they wait for strong momentum. Then they trade the direction of the move. This allows them to participate in the trend without guessing the outcome of geopolitical events. Part 4. Risk management. Trading during geopolitical events can be extremely volatile. That's why risk management becomes even more important. Professional traders reduce position size during high volatility. They use wider stop losses to avoid noise, and they focus on clear momentum setups instead of emotional decisions. Global events shape financial markets. Understanding how war affects gold, oil, and stocks can help traders interpret market behavior during uncertain times. But the key isn't predicting the future. It's reacting intelligently to what the market is already doing. Because in trading, opportunity often appears when uncertainty rises.